Welcome back to CNBC TV 18. You're watching Midcap Multibaggers. Still with us, we have Mr. S.P. TULSIAN, PRAKASH, DIWAN, AMBAREESH, BALIGA, as well as DEVEN, CHOKSEY. But we've given you three, and we're going to throw in another one then. So let's start off with Mr. TULSIAN then. He's going to tell us a stock from the chemical space. Mr. TULSIAN?
Nigel, the fourth and last stock is a Bodil Chemical. They are makers of dyes and dye intermediates. And actually on 30th March, when I gave this news, at that time, if you see, the China have stopped production of dye intermediates, that is H acid, vinyl sulfone, J acid, gamma acid. These are all the dye intermediates which are used for making dyes, and the Bodil Chemical is the largest maker of dye intermediates. I am specifically referring dye intermediates, not the dyes, and they have 8 plants in India with a very good presence across the globe, catering to about 70 countries. And actually post 30th March, the profits of the realizations of all these, specifically H acid and vinyl sulfone, has increased by about 50% to 150%. So the full effect of that will be get reflected in the Q1 numbers, and I am expecting this company to almost double on the EBITDA and as well as double on the PAT front. Because if you see the numbers, closer to about 20 crores they have all been posting for all the 4 quarters of previous FY16. But as I said, that the major increase in the realization will get added to the margin. So I'm expecting EBITDA of closer to about 70-72 crore with PAT of closer to about 40 crore. And if you see the price behavior pattern, at that time I've given call on Akshar Chemical, Kiri Industries, Bodil Chemical, Bagaria Industries, and so many other dye intermediates maker. Since then, in fact, this is the stock which has performed least. About 30% it has risen, while Kiri Industries has risen by about 300%. So what I feel, and apart from that, the company has received the expansion permission from the central government to triple their capacity in next couple of years. And this central government permission is very critical because of the pollution, while this company has all the pollution compliant norms and infrastructure available with them. So very good working. And the best part going forward is that China, which has already seen closure of many of the plants, has now turned importer of the dye intermediates. Earlier they used to export half of the quantity across the globe, but now they are importing dye intermediates to make dyes. So going forward, Bodil seems to be the most underpriced share in this dye intermediate space, and I expect a target of closer to about 120 in next couple of months. But I won't be surprised to see the price moving to a level of about 150 next 1 year or so.
Okay, that's about Bodil Chemicals. Our next recommendation is from PRAKASH, DIWAN. You've picked TransportCop. Why is that?
Well, logistics is a favorite space, and you can't be away from this for too long. And my sense is that, it's difficult to find a player that's across all verticals and provides a solution for the entire value chain. And this was one player that I found, which again, going with the theme of being one of the largest, one of the best, this is one company that claims to be moving 2.5% of the country's GDP in cargo value. So that's really something that talks about the scale. It's actually into all verticals. It's into freight, it's into shipping, it's into door-to-door delivery, it's into supply chain logistics. It's also into the cold chain thing, which recently it started off. Now, what's good about TCI is that you have a business which has very huge strengths which are difficult to replicate, and the entry barriers they've created are huge. So freight, which is a low margin business, is only about 27%, which is the road transport that you normally see. A lot of players out there are trying to differentiate but find it tough. Shipping, which is high margin, is where they have a own fleet of 4 cargo ships. That's a good USP that they have. The supply chain logistics area, and that's what attracted me, because one of the key components of growth there is the auto logistics space. They have a JV with Mitsui Corporation of Japan, and this particular area is very high margin because it's value added. It's difficult. The replacement cost is very high. There's a high entry barrier, and they are growing so phenomenally there that this would probably compensate for the slow growth in the other verticals. Now, the good news is that apart from the strong presence of 9,000 trucks in its fleet and 14,000 offices and all of those USPs, TCI has already announced the demerger of the XPS, which is the door-to-door business, which caters to a lot to the e-commerce segment. And all of us are looking for something to participate in on the e-commerce side. So this is the guy who delivers all those things that you order on Flipkart and Amazon and stuff. And this business will rapidly grow once it kind of stands on its own feet. The High Court of Hyderabad has already approved that merger. It's a ratio of 2 shares of the parent company against which 1 share of the XPS division would come in. Once that happens, there'll be a lot of unlocking of value for the shareholders. And the business itself is kind of on a turnaround phase and hardly any debt. It's just about some 0.6 debt equity ratios. I like companies which are not over leveraged. They've shown a turnaround in numbers. They have scale and leadership. So, you know, it meets all the kind of check boxes. And my sense is this is also a multi-bagger on the long run. But even for the immediate next 18-24 months, you could look at a target of 500 and you should be comfortably attaining that.
All right, Prakash, thanks so much for that one. But one sector that will really have to prove itself will have to be the cement space, because we've seen a big run-up in the last quarter or so. But Ambareesh is going to be bringing us one such stock, JK Lakshmi Cement. I remember, Ambareesh, it was a small cement company, it became a medium cement company, and now it's nearly a 10 million ton plant. You believe it's going to be good?
Absolutely, absolutely, because I think the cement rally has just started. And looking at the sort of infrastructure boom which we should see, I think in the next 3 or 4 quarters, there'll be a supply-demand mismatch. I think there'll be a shortage of supply, and this should improve the margins for most of these companies. So, in fact, in addition to looking at those companies which are low on capacity utilization, JK is one where the capacity has shot up nearly 60%. And this will stand in good stead when the demand increases. So here, in fact, I see, EPS was negligible in FY16. I think we should see about 6-7 rupees for FY17. For FY18, this should shoot up to 13-14 rupees, and possibly in FY19, we should see in the 20s. So looking at that sort of a growth, and especially with the way the interest rates, they've been able to bring down, their total loan is about 1,600 crores. They've been able to bring down the interest rates by nearly 100 basis points, plan to pay back about 200 crores every year. So I think overall, with the sort of cash flows which you're seeing, I think this stock can easily move to those levels of about 560 if I'm talking of the next 9 to 12 months. But then if one can hold on for the next 2 or 3 years, the returns could be much, much higher.
Okay, JK Lakshmi Cement up 25% since the start of the year, but it has underperformed the other mid-cap cement companies like Heidelberg Cement as well as Shree Cement. But we've got the final pick, the 16th one coming up for you, and this one is from DEVEN CHOKSEY on solar industries. DEVEN?
Yeah, Lima, I think this is one pure play defense company. I think a defense play, as we want to call it as. They are in the business of explosives, and they have been always, I think, the suppliers to explosives, including to government, but largely to the private sector, and apart from that, I think to the export markets. They have systematically focused on building the capacities exclusively for the government defense supply, where I think you require a huge amount of permissions, etc., which they have, I think, completed now. And this year, the company has guided that they would be starting the supply in FY17, and it would be everything somewhere around the first business would record it at about 80 crores of rupees in this year. Why I like this particular company on few counts. One, the government's business, I think the defense business is basically opened up, and I think some of the companies who are already ready, they are going to get the benefit out of it, solar being one. Second thing is the Coal India has already talked about increasing the production, and we have seen, I think, increasing the production from 14 onwards till 19. They are talking about doubling the size of the production to 900 million tons. And for mining activities, the explosives are required. So again, I think you are going to see larger amount of growth in explosive business. Also, along with that infrastructure business, road development business, I think wherever you will require the explosions, I think the explosives are required, and that's where I think this company is very well positioned. So from the demand prospects, I think company is well positioned. They have created the capacities, and they are ahead of others, I think, as far as the ability to execute the projects are concerned. Plus the focus on African countries for larger amount of growth from that territory is also suggesting that the company could grow well. Maybe on a year-over-year basis, you would see a larger growth in this year. And I think probably the company would grow at 25-30% CAGR growth. And we like such companies which are growing at 25-30% CAGR level, which we see a visibility in this company for next 3 to 5 years once again. So again, I think it's a company for a long-term investment. Certainly, I think it's a play which is going to be played out over a period of time under the kind of potential that it holds.
Yes, we all love those compounding stories, but those were 16 exciting mid-caps which can become large caps from different sectors, different attributes. Some are from the sunrise industries like defense, some have niche positioning, global competitiveness, sound management, scalable, but all different attributes, but significant ups. The common thread is they all have significant upside left in them, and they can all be potential multi-baggers. On that note, we'll thank all our MARKETWALLAHs for joining us and giving us that list of 16 mid-cap companies which you should watch ahead of the Q1 FY17 earnings. Let's quickly recap then the mid-cap ideas that we've heard. First from Mr. SP Tulsian. So his recommendations were SML Isuzu, Berhampur Chini, Bodel Chemical and Kingfar Science.
And let's recap all the multi-bagger ideas that we've heard from Prakash DIWAN. He's got Precall, Orient Paper, Tirumalai Chemicals as well as Transport Corporation.
And the ideas that we've heard from AMBAREESH BALIGA, Cox & Kings, HEG, Titagarh Wagons, as well as JK Lakshmi Cement.
And we also got some multi-baggers coming in from DEVEN CHOKSEY. We have UPL, Sterlite Tech, Bajaj Finserv, and maybe a very explosive Solar Industries. Okay, thanks so much, gentlemen, for joining in today and giving us all those 16 picks. Watch out for them. Earnings season is going to be kicking off shortly. But with that, it's a wrap on Midcap Multibaggers.